Before we begin, quick disclaimer. Nothing in this episode should be considered investment advice. Results discussed have not been independently vetted. Any claims made by the guests have not been verified. The content is for educational purposes only. Views expressed by the guests do not reflect those of the host or this show. If you're a high-income professional, you've probably felt this tension before. You want the wealth building power of real estate, the cash flow, tax advantages, long-term appreciation. But the reality, it often turns into a second job. Late night, maintenance calls, tenants, issues, constant decisions. And even if you do have the time, there's another problem. How do you actually know you're picking the right deal? Because for decades, real estate investing has been driven by gut instinct, local knowledge, fragmented data. But that's all changing with artificial intelligence. What if we're entering a world now where AI can actually tell you where to invest, why a location will outperform, and help you access the same types of deals that were once reserved for institutions? That's what today's conversation is about. Now, just a quick note before we dive in. This is a sponsored episode with Priority Funds. As always, the goal here is to bring you insights, frameworks, opportunities that can genuinely help you think differently about building wealth. In this episode, you're going to hear about how AI is being used to analyze real estate at a completely different level, from identifying places people love to predicting performance to helping investors move from active, time-heavy ownership into something much more passive and scalable. So if you've ever thought there has to be a smarter way to invest in real estate, this episode is going to open your eyes to what that future might look like. Now let's get into it. Welcome to an episode of the Financial Freedom Podcast. Today's sponsored episode is John Renne through Priority Funds. He's going to talk to us about how artificial intelligence is going to be impacting real estate and how Priority Funds uses artificial intelligence. I'm happy to have him on for this long-term partnership and happy to talk about AI real estate and Priority Funds. John, welcome.
Thank you, Christopher. It's nice to be here.
Briefly introduce yourself. You're with Tulane University, Priority Funds. We'll dive into the fireside.
I am a professor and director of the real estate program at Tulane University. We have over 1,500 Tulane alumni working in all major markets across the United States. We have undergraduate programs, bachelor's, minor. We have a master's program, been around for a long time, just relaunched it. It's an executive online program. Students can join from anywhere. They do it full-time, part-time. It's a great opportunity for folks looking to further their education in real estate investment and development.
Our audience are high-income professionals, doctor, lawyer, high net worth, engineers. When people come to Priority Funds or come to you, what is their number one question? What are they seeking solutions, answers to their questions?
Most of our investors fall into that category. We find folks who are very busy, they want the benefits of real estate ownership. I own a fourplex, very time consuming. When anything breaks, you get a phone call, you got to drop what you're doing, you got to respond to it. It's not passive, it's very active. Prior to launching and creating Priority Funds 5 or 6 years ago, I was a land developer. Around 2009, I led a group of investors. We purchased a 21-acre piece of property in Denver, Colorado, which was located 3.5 miles from downtown Denver, right next to a train station. The train station was under construction, opened in 2016. I led the process of getting the property rezoned, entitled, getting the development approvals in place. We turned a $3 million piece of property into a $13 million piece of property when we sold it. It was very exciting and fulfilling coming out of that. My partners and I and a group of friends and family investors that wanted to diversify our investments across hotels, multifamily, commercial real estate. We didn't want to put all our eggs in one basket. We wanted the mutual fund of real estate investments. We wanted the benefits of private ownership, which is the pass-through depreciation benefits of taxes. We launched Priority Funds. Since then, we have 25 different investments across the United States, all institutional quality investments, selecting best of the best. We own a small piece piece of $100 million hotel in Alpharetta, Georgia. We own a small piece of a $50 million apartment complex in Durango that just sold. It's about getting the types of investments that most accredited investors like ourselves who've done very well in their careers don't get these types of opportunities often because they go to institutional investors through our network. We're able to get a piece and syndicate that out in the form of our funds. Our investors can get exposure to these incredible investment opportunities.
What's the investment strategy? What geographical locations are you targeting?
I have a PhD in urban planning, and I've used statistics and quantitative analysis, but I was using the tools I learned, in the late 90s and early 2000s when I was a student. I started to get interested in AI. I decided to learn computer programming, get a master's degree in computer science and AI. I have a database with property data in the United States. Part of our strategy, we hone in on places that are best risk-adjusted places for investment. In real estate, we say location, location, location. It's about amenities, being able to hop on a train if you're in New Jersey and be in Manhattan in 30 minutes. If you're in Salt Lake City, it's about being in a vibrant neighborhood where you walk to restaurants, coffee shops, and take the light rail up to the university or downtown. And I am using data, AI, and machine learning to analyze places all over the US. We take advantage of information to make better decisions. My partners and I are the largest investors in our first fund. We invest alongside, so we share the same risks and rewards as our investors.
Talking about AI and real estate, and you talked about the areas for data and analytics. What other areas do you see artificial intelligence impacting real estate?
It's a great question. I'm excited. I'm working on a AI model wherever you live. Everyone has their favorite places to eat, favorite places to go shopping. The idea is if you look around, what makes a place great? Our tagline at Priority Funds is investing in places people love. If I go down to the main street, I'm willing to spend money to be in that location because it's a vibrant place. There's visual cues about that place that we have a hard time representing with data until now, AI. One of the things I'm pioneering in my own research that we're bringing into Priority Funds is computer vision. Google has mapped out the entire world using 360-degree imagery called Street View. I'm taking those computer vision images we see, processing that, understanding what makes a place more valuable and why it's more valuable. We can use AI to understand exactly why that main street that you like going to is more valuable, why people are willing to pay more rent than another place that may not have those attributes. We're using innovative data like images to use AI to determine how that relates to investment outcomes and performance of particular locations.
Quick pause here. If this episode is making you rethink how your income is structured, that's intentional. Information doesn't create freedom, structure does. At the end of this episode, I'm going to show you how to diagnose whether you're building leverage or just scaling complexity. Let's get back into it. Can you talk about how artificial intelligence will streamline the acquisition and selling process? It's really painful to acquire, sell, and manage real estate these days. It's almost prohibitive. How do you see artificial intelligence streamlining and making less friction?
I don't think we've, as an industry, made much progress in that area. I'm working on putting together a major AI real estate conference that will be held in New Orleans in 2027. The areas we've seen AI make meaningful impacts in the real estate industry, particularly on the operations side. Companies are using AI to help manage the performance of their apartment buildings, trying to cut costs, being able to use AI to manage rent collection, being more efficient. The operations side has benefited by AI. We're seeing AI to help with due diligence and understanding which properties are the better ones to invest in, why, and what goes into that. For example, we were looking at investing in a hotel near the Kennedy Space Center in Florida. We were able to use an AI tool on a map. You can go into the hotel and see how many people are visiting that hotel on any given day and the trends over time. We saw a post-COVID spike, right, after people started traveling again in 2022, 2023. There were a lot of people going to that hotel as visitors, and we saw a downward sloping trend. That gave us the information. This is not going in a good direction. We are able to use big data to look at that. That's an area where AI can make a meaningful difference in the future. It's been a challenge because it's not a technological problem. It's a governance issue. A lot of the transactions around real estate are governed by local laws. Unfortunately, local governments are slow at getting through these processes.
Moving forward, for people that are interested in priority funds, how does being with Tulane impact what you do with priority funds? Are they tied together? Any conflicts that people need to be aware about?
No conflicts. My role at Tulane is a researcher and an educator. I teach in the School of Architecture and Built Environment. The Tulane School of Architecture has been around for over 130 years. My colleagues run private architecture firms and build for some of the best developments in the US, across the world. Our dean is a world famous architect from Barcelona. He has a firm that practices in the United States and Barcelona. I have a firm outside of the school, Priority Funds. I built Priority Funds before I came to Tulane. I've been at Tulane for a year. Priority Funds is built on my career of networks across the US. We have more than 350 sponsors on our database, people that send us deals and opportunities. My role at Tulane is interesting because now that is growing the network. I have folks that I've met through Tulane that run successful real estate companies. They know that I'm looking to invest in projects. I can look and evaluate and make a decision whether we want to invest in that or not. If there's anything that comes up, I vet that. It's common across the real estate industry. If you look at folks who work for the leading real estate schools across the United States, a lot of them operate their own funds. They've been successful folks that have been with Harvard, NYU. That's what makes education better. I'm not sitting in a classroom teaching to students based on book examples or research. I bring real world practical examples into the classroom. That makes for a much richer education for students.
Talk about the investor requirements, minimum holding period, accredited success stories with priority funds.
Our investors are all credited. This is a long-term patient investment. You can invest directly or you can do self-directed IRA. We have clients that do both. Investors receive K1s, so depreciation and other tax benefits do flow back to the investors. We've been able to generate a good amount of cash flow, cash on cash returns from our closed funds. They have upside opportunity realized over time. For the growth fund, a 4 to 6 year window. For the income fund, 7 to 10 years. We're not a get rich quick scheme. If you want to invest in priority funds, it's a long-term patient equity investment. We do sidecar investment opportunities from time to time where folks that want to invest a little bit more in a deal they really like have that opportunity. We work directly with investors to look at their personal goals, set up an SMA, separately managed account, tailored to individual needs. We have families that invest with us through their family trusts. We're comfortable and familiar working with ultra high net worth families to achieve long-term real estate investment goals that they're looking to achieve.
If people listening to this were interested, how can they connect with you and learn more?
Go to our website. I'm on LinkedIn, John Renne. Happy to set up meetings, have direct conversations. My colleague Harmeet heads up our investor relations. He would be happy to meet and have a direct conversation. We want to develop a long-term relationship with our investors. The average investor length exceeds 10 years. My co-founding partners, Peter Rodriguez, the leader in the construction industry in New York, just got a contract to build a new skyscraper in downtown Manhattan. His family construction company has built buildings in Manhattan. They've done building in Hudson Yards. They've built residential building in your Central Park. They've done buildings in the World Trade Center. My other partner, Monica Parikh, had a career over 3 decades working on all aspects, looking at the debt equity side, looking at investing on behalf of ultra high net worth families, institutional investments. The three of us are complementary in our skill set. We're able to offer our clients the ability to tap into our knowledge and our expertise to see where we're putting our money. Start small, give us a try, talk about what your goals are. No pressure or commitments. We're looking to expand our network beyond friends and family to grow priority funds to that next level.
Thanks so much for coming on, talking about AI and priority funds.
Thank you, Christopher. I look forward to continuing a conversation with you and your audience moving into the future.
Let's zoom out. If you're a physician, founder, or high-income professional, and you feel like you're working harder every year, but not structurally freer, you're not alone. The mistake isn't effort, it's architecture. This show exists to help you convert expertise into scalable leverage, faster and with fewer expensive missteps. Here's the diagnostic I mentioned before. If your income requires your constant presence, if your capital isn't compounding outside your profession, if your highest value talent is doing low value tasks, you don't have a growth problem, you have a leverage design problem. And if you want to fix it with clarity instead of guesswork, I offer a limited number of one-on-one leverage strategy sessions each month. We audit your income model, capital deployment, authority positioning, and structural bottlenecks, and design your highest return move. If you're serious about compressing years into months, the link to apply is below.